Welcome to the Daily Vibecasting. The AI race has, officially shifted its battleground, and the speed of wealth creation is just accelerating faster than ever.
It's a violent pivot. We're moving from foundation models to these really focused application layer businesses.
Absolutely. We've got one startup, pretty secretive, hitting a reported 100 million ARR in a record 8 months.
And at the same time, hardware is fighting back. BYD is suddenly challenging Tesla's charging dominance with a stunning 1,000 kilowatt breakthrough.
And on top of all that, the great theoretical debate over AGI itself is heating up again between titans like Demis Hassabis and Jan LeCun.
We've been synthesizing the raw newswire from X, and the signal couldn't be clearer. 2025 is the year the path to AI wealth just completely redefined itself.
Right. We're in this phase of aggressive applied innovation now, and the downstream consequences are just massive.
They are.
Exactly. So today we're taking all these trending posts, grouping them into these critical market clusters to really understand the ripple effects. We have to start with the biggest story on the tape, the total reinvention of AI strategy, and, who's winning the AI market war.
Okay, let's unpack that shift in strategy.
So we have to look at the core critique first. It's perfectly captured in this thread from @JohnHernandez. He's citing Sam Altman's argument that Google didn't lose the early AI race because of talent.
Right. Their engineering resources are, frankly, unmatched.
Totally. It was because of a massive flaw in mindset. The whole claim is that just adding AI to existing products, integrating it bit by bit, it just can't compete with rebuilding from scratch with an AI-first approach.
It's a harsh assessment, but if you look at the metrics, they seem to bear that out, at least culturally. The source material points out ChatGPT is seeing, over 300 million weekly users? Meanwhile, Gemini's adoption, even though it's technologically impressive, has been a lot slower to fundamentally change how people behave. The mindset is the moat, not the model size itself.
It's the user experience built around the core intelligence.
That's what matters.
And this whole strategic pivot is perfectly reflected in the Y Combinator analysis from @iCombinator. They basically declared 2025 as the year AI stopped feeling like this academic experiment and started feeling, quote, buildable.
The opportunity has explicitly moved back to the application layer. It's all about specific workflows, domain expertise now.
What's fascinating to me is the technical maneuvering founders are using to pull this off. They're not just relying on a single big vendor.
No, they're arbitraging multiple LLMs through orchestration layers. And for anyone who isn't deep in the weeds on this, an orchestration layer is basically a smart router. It decides which model is best for a certain prompt, manages costs, ensures uptime.
And provides a fallback if one API goes down. So instead of being married to OpenAI or Anthropic, you're just using them like interchangeable utilities.
Precisely. And the data from YC backs this up. Anthropic models are now actually overtaking OpenAI as the top choice for a lot of founders. Gemini is rising quickly, too.
Especially for things that need real-time information grounding, right?
Exactly. It just signals this major shift in power away from the model creators and back toward the application builders.
Okay, I see the efficiency, but where's the hidden friction? You've got founders building their entire business on these complex arbitration layers.
Well, that's the structural risk.
Right. If the intelligence underneath becomes a commoditized utility, which this trend is suggesting, doesn't that eventually just crush application margins?
That is the multi-billion-dollar question. If you're just building a wrapper around a public API, your competitive advantage is, it's fleeting. The real long-term winners are going to be the ones who control proprietary data sets or own the distribution channel.
So relying on these layers creates a huge dependency risk.
A severe one. If a major model provider changes its pricing or governance tomorrow, your entire cost structure just collapses. I think the only way to escape that commoditization trap is to execute with such precision that you capture the market before anyone can copy the wrapper.
Speaking of market capture and execution, let's look at the speed of wealth creation this new landscape allows. The hypergrowth story from @HideCloud is, it's almost unbelievable. Menace AI reached 100 million in annual recurring revenue in under 9 months.
8 months, specifically, which is reportedly a global record.
A global record that signals either a true, unprecedented platform shift or
an incredibly frothy bubble driven by investor FOMO. When a company hits 100 million AR that fast, it forces the entire VC ecosystem to just reevaluate their valuation curves.
To their credit, Manus AI is claiming to outperform the frontier model labs on key benchmarks in their niche. They have 2 products already in the A16's OP50 list, which is highly selective.
Right, so how do you tell the difference between platform change and a bubble? Why is this company succeeding where so many others are just burning cash?
It seems to connect right back to that Y Combinator context, right? The founder bottleneck.
It does. The initial hype around solo founder scalability with AI is turning out to be largely false. You can't just point a general model at a problem and expect a huge revenue stream to pop out.
So successful AI companies, like Glean was the famous example, they succeed because they prioritize domain-specific fine-tuning and just impeccable niche execution.
That's it. Manus AI likely cracked a very specific high-value vertical where their domain knowledge let them build a hyper-optimized tool that general-purpose LLMs just can't touch yet. Execution is the new differentiator, not just the raw intelligence underneath.
It sounds like the race is no longer about raw intellectual horsepower, but about applied, specialized intelligence, which I think leads us perfectly from the abstract battle of mindsets to where AI is physically putting its hands to work, moving off the screen and into the physical world.
This is where we're seeing some of the most stunning innovation, the rise of physical and digital agents.
Let's start with the physical. We've got news from @PhysicalInt, Physical Intelligence, detailing their new Point 6 model. And they are tackling tasks that, for humans, are completely trivial but have historically been nearly impossible for robots.
Yeah, this is the frontier of embodied AI. The demos are so simple, but they're revolutionary. You have robots washing greasy pans, making peanut butter sandwiches.
Even carefully inserting and turning a key to unlock a door.
These tasks demand incredibly complex sensorimotor skills, coordination, real-world interaction, and they achieved a 52% average success rate across several of these robot Olympics events.
So this flies right in the face of Moravec's paradox, right? The classic idea that reasoning is computationally easy, but
simple physical skills are computationally hard. Precisely. The core breakthrough is how they did it. Rapid adaptation through physical pre-training.
And their model got those high success rates with less than 9 hours of task-specific data.
The previous baseline models, the vision language ones, failed completely.
So what does physical pre-training even mean? Are they just feeding it massive videos of humans making sandwiches?
It's a bit more sophisticated. It relies on these massive, diverse data sets that incorporate physics, kinematics, haptics, simulation data, all to create a baseline understanding of real-world constraints.
Mass, friction, gravity, texture.
All of it. This pre-training gives the model common sense about physical space so it can adapt rapidly. The critical question, though, remains, if the model relies so heavily on this pre-training to deal with real-world variability, the difference between a light wooden pan and a heavy cast iron one.
What's the cost of deployment at scale?
Exactly. We may have solved the data bottleneck, but the complexity of physical deployment, dealing with infinite real-world entropy, that remains the final hurdle.
And we're seeing a similar agent breakthrough on the digital side, too, solving enterprise complexity.
The digital agent layer is just exploding, aimed squarely at the enterprise. Look at ClickUp's super agents, reported by @DJCURUW. These are designed to act like human-like virtual team members.
Taking mentions, sending emails, handling DMs.
And accessing the full context from connected apps. This is direct response to that infamous Gartner statistic, the one that shows a 95% AI adoption failure rate in big companies.
They're trying to solve the last-mile problem, integrating AI so seamlessly it just feels like another competent person on your team.
And that idea of seamless, autonomous integration is mirrored by @Antelosica's Lovable, which is trying to democratize software creation itself. Lovable's AI can teach itself how to use any NPM package.
For listeners who don't know, an NPM package is basically a reusable, standardized module of code, a library of functions.
So the AI can look at the tools available and just instantly integrate them into a custom application based on a natural language prompt. Like we saw in the demo, it turned a sentence into a production-ready analytics dashboard.
Which is an astonishing speed for software development.
It is. But if we connect these two agent trends, super agents managing emails and lovable building infrastructure, we have to talk about security governance.
This is the critical ripple effect. If agents are managing DMs and emails and operating with user-level permissions,
the security and compliance questions become immense. This is the highest risk factor we see in the market right now.
Think of it this way. Ambient collaboration is the huge benefit, getting work done while you sleep.
But the risk is that we've basically given an intern the keys to the entire office. If that autonomous agent starts acting on bad data, spreads misinformation, or creates security holes because it has user-level permissions across all your apps.
Traditional governance models are just completely bypassed.
Entirely. So is this democratization, or are we just accelerating the generation of low-quality yet operational code and content at a massive scale?
It's both, isn't it? We're trading friction for risk.
We are. The speed of iteration goes up exponentially, but quality control and security oversight are struggling to keep pace. We are empowering non-experts to build complex systems, and that means we need a whole new era of guardrails we just haven't designed yet.
Risk is inherent when you push the frontier, and nobody is pushing harder than the titans battling over the theoretical definition of intelligence itself. Let's get into the philosophical foundation of the whole field.
It's the perennial fundamental theoretical split.
So Demis Hassabis, the CEO of Google DeepMind, reignited the AGI philosophy fight. There was a highly viewed thread where he's rebutting Jan LeCun.
And LeCun's widely viewed claim was that true general intelligence is, quote, complete BS.
Right, because human intelligence is inherently constrained and biased by our physical, embodied experience of the world.
And Hassabis, as the context shows, pushes back. He argues that brains are, in fact, extremely general, correcting LeCun's focus on those physical world biases. Hassabis sees the brain as an approximate Turing machine with this vast potential for abstract thought that goes way beyond specific physical tasks.
So we have the embodiment camp, LeCun, versus the generalization camp, Hassabis. Why should our listeners care about this, esoteric argument?
Because these theoretical disagreements directly fuel tangible, practical advancements. LeCun's ideas, for instance, they lead directly to architectural experiments like his GPA architecture, which aims to learn abstract features of the world through observation, not just prediction.
And Hassabis's ideas drive the quest for ever larger multimodal foundation models that can tackle any task presented.
Exactly. The field might not agree on the definition of AGI, but they agree on the need to test the boundaries. And their arguments determine the direction of billions in R&D spending. Speaking
of testing boundaries, we have to talk about the physical infrastructure shockwaves, starting with the EV market. At Dominic's drops stunning news from China. BYD's Super E platform is achieving 1,000 kilowatt charging.
That is just monumental. We are talking about adding 400 kilometers of range in 5 minutes from a low battery state.
To put that in perspective, that's 4 times faster than Tesla's current V4 superchargers. Gasoline, who?
I mean, it sounds almost too good to be true. And you have to ask, what is the major second-order cost here?
It has to be the grid.
It is the ultimate bottleneck. This isn't just a battery race anymore. BYD's blade batteries mitigate some of the heat and degradation issues. This is now unequivocally a grid race. The context highlights the astronomical hurdle. Each single charging session demands power equivalent to what 200 to 300 homes would use simultaneously.
That is a staggering power drain for just one car.
It means you can't just install a fast charger. You have to re-engineer the entire utility infrastructure that feeds it. The cost of the necessary upgrades across cities and highways, new substations, massive cabling, transformer upgrades, it's astronomical.
So policymakers and utility companies are now the critical limiting factor on 1,000 kilowatt adoption.
Not the battery engineers.
And while infrastructure on Earth struggles to keep up, we are preparing to leave it. We saw a quick but important highlight from @ISauruspace showing Europe's push for independent space access.
Indeed. They successfully completed 30-second static fire tests for the Spectrum rocket launch up in the snowy Arctic. It clears the path for a January 2026 orbital test of ESA CubeSats. It's a critical step.
Back on the digital frontier, we are seeing the same theme of extreme friction reduction for creators. At Claire Silver 12 demoed Unreal MCP, where AI, specifically Claude, uses natural language prompts to autonomously build complex 3D scenes in Unreal Engine.
It's essentially turning concept art into a functional 3D environment with just a text prompt. And on the developer side, at GDB, Greg Brockman is promoting the experimental codex feature, enabling background terminals.
So developers can run long-running processes like dev servers without interrupting their AI-assisted coding sessions. That's a huge workflow improvement.
It's pure efficiency gain.
Yeah.
But again, we have to assess the trade-off. When complex tasks like high-fidelity 3D modeling or high-level coding become so accessible with just a simple chat prompt,
right,
what is the long-term impact on foundational skills?
Right. Does this massive reduction in friction lead to more innovation or just a flood of low-effort, template-driven designs?
Are we truly raising the floor of creative output? Or are we just eliminating the desire to master the robust skills you need to build truly novel systems?
That friction-risk trade-off is the recurring theme today. All right, let's pivot now for our final segment, the cultural vibe check. Time for the annual linguistic assessment.
This is always a great barometer of the social mood.
So X has revealed the official 2025 Word of the Year based on an analysis of 4.1 million posts, and the winner is chopped.
And they even had to apologize to the runners-up, vibe coders and aura farmers.
So chopped, revived Gen Z slang. It means unattractive or ugly, but it's most often used self-deprecatingly, right?
For one's own looks or social fails.
So what does the widespread adoption of a term like that say about digital culture in late 2025?
Well, it suggests a few things. First, digital culture is just hyper-accelerated in its evaluation of aesthetic and social value. Things are judged instantly. Second, the widespread use of self-deprecation. It acts as a defense mechanism. It's a preemptive strike against judgment.
It's a weird mix of performative humility and competitive self-awareness.
It is. It lets people engage in that rapid social processing while kind of blunting the harsh edges of that scrutiny with irony.
I think we all need to apologize to the vibe coders.
Maybe next year. Okay, to close out our cultural vibe check, let's look at a bizarre blast from the past shared by @DrLemma. In 1984, they found nearly $6.22 million in cash, gold coins, and platinum bars.
In an abandoned budget rental car at SFO.
A true Pulp Fiction plotline, likely involving drug trafficking, though no criminal charges were ever actually filed.
So what was the outcome for that massive haul?
Well, the interesting legal context is the outcome. The government's use of civil asset forfeiture. A federal judge awarded the entire amount to the U.S. government.
So they confiscated the property without needing a conviction.
Exactly. The two budget employees who found it were awarded a paltry $75,000 each in 1987. One of them noted netting only $30,000 after taxes and legal fees.
That's a stunning example of state power over private property, even if it was illegally acquired. Makes you think about modern financial control, doesn't it?
Absolutely. When you look at that 1984 story, it's a high-profile example of a concept that's still very much alive today, especially in debates over digital assets, sanctions, modern banking controls. The principle that property can be separated from criminal conviction still has massive ripple effects for you and your assets today.
That's the daily vibe casting for today. We covered a huge strategic pivot in AI, realizing the application layer is the new battleground for wealth, not just the foundation models. We saw infrastructure racing to keep up with hyperfast ED tech, and the line between digital and physical AI capabilities just rapidly blurring.
My prediction for tomorrow, based on the sheer speed of development and those security implications we talked about, is that the headline will not be about the release of a new foundation model. Instead, based on the explosive growth of application layer AI and the self-integrating capabilities of tools like ClickUp's super agents and Lovable, tomorrow's news is going to be dominated by a major regulatory or security challenge. It'll stem from an autonomous AI agent operating with user permissions. The governance risk introduced by these powerful permission agents is now rapidly outpacing our ability to control them, and we will see the first major failure point soon.
A vital warning about that accelerating governance gap. That's the daily vibe casting for today. Stay locked in.